Hey, welcome back, everybody. Good to be here. Ed Ponsi, your FX educator, here on behalf of FX Street. One more time, getting ready to get started here. The Euro's made a nice recovery off of this, off of this news from out of the UK. In fact, going back really quite a rally here, quite an interesting rally over the past hour or so. British pound has pulled back after rallying a bit, so it's just kind of drifting between its highs and lows. I'm casting a very wide net on this one with multiple entries and a longer time frame. I did jump in and out twice for a profit, and but I'm still going to also keep some for the long haul. So this was a tradable situation today with the British pound, but I do think it's also potentially a longer-term scenario, trading scenario as well. If you look at the daily, it still looks like an inverted head and shoulders to me, although that last candle does not look good on this right shoulder. It's still a right shoulder. It's just an elongated right shoulder at this point. Okay, now let's take a look at some other things. There's quite a bit going on today. S&P 500, first of all. Here's the S&P, including the futures. So you can see we're actually bid slightly higher this morning after a couple of down days. We just kind of drifted. You could see how we had all these green candles, and the green candles just get smaller and smaller until they just disappear, and we drift sideways. We get a couple of big red candles to start the week, and now a little bit of green on the comeback. But we're really still kind of stuck in here. Ed, do we have to pay interest on pound U.S. dollar? It's a good question. Right now, I would say most likely yes. If you're long the pound against the dollar, most likely yes. But not much. The UK interest rate is 0.25. The US interest rate is 0.5. They're very close to each other, so I would imagine that, yeah, there's going to be a very small interest rate charge on that trade. Look, if there was a lot of interest involved, we would not be thinking about, if there was a lot of interest involved, we would not be thinking about it for the long term. But in a short-term scenario, that it's very, very little interest. Now, how much interest one pays depends on which broker you're using. So I would just refer to your own broker and ask them, hey, what's the situation here regarding interest on this trade? But at any rate, I think that the potential gains far outweigh any amount of interest that would be paid on such a small differential. I mean, if there was a wider differential, a wider interest rate differential, I should say, between the U.S. and Great Britain, I would be much more concerned. Okay. I was told 71 cents per pip. That doesn't sound right. First of all, it's not charged by the pip. That doesn't sound right to me. 71 cents per pip. It's not charged by the pip. It's charged by the day. So do you mean 71 cents per day? I mean, it's all relative, too, on the size of the trade. I mean, but everyone should do what they think is best. I'm not giving investment advice. So if you don't think it's a good thing to do, you shouldn't do it. No question about it. Okay, anyway, S&P, it's kind of been doldrums here, still kind of stuck in this range. Okay, and we had earnings overnight from Tesla, which should be interesting. The company missed earnings by a wide margin, but they made very bright projections going forward. But you got to understand, they always do that. They always miss earnings, and they always make bright projections going forward, and that saves the stock. So, will investors ever get tired of that? I don't know. I think that there is potential there from Tesla, and people don't want to go against that potential. So, it's hard to buy that stock based on the fundamentals. The fundamentals of Tesla are terrible. The company loses money every time it sells a car. They lose money. But they keep talking about this rosy future where they're going to become profitable. And I guess that prevents people from selling it. But there's the chart. Stock had a heck of a run along with the market. This was after the company lowered its projections, and it's right where it was. It's $225 a share, $226 a share as we go into the open. We'll see how people treat it. Once those opening orders get filled, we'll see how traders decide to treat Tesla. Apple's been pretty good since reporting earnings. Apple has a nice big double bottom pattern. This is actually an island. We call this an island in technical analysis. We gap down, and we're stuck on this island, and then we gap up and we escape the island, right? So that's an island formation, and that island looks to me like double bottom on the island. Okay, so here comes Apple showing signs of life. Again, Google, one of the bigger names out there. Big gap up after earnings. It's right into resistance, though, at 800. It's right into resistance at 800. Hard to buy up here. And Amazon just keeps going higher and higher. Right? These are the leading stocks. Here comes Facebook. Facebook, after earnings pops, it's pulled back a little bit. Looks like a little bit of a flag pattern. But all those stocks look pretty bullish. And the valuations are very high, but you have to understand all this stimulus that is being put out there by central banks, all of this stimulus leads to what? What does it lead to? Where does it lead us? Where does it take us? Well, a lot of that money ends up in the stock market. So stock markets love this stuff. And we're getting it from Japan, we're getting it from the UK, we're getting it from Europe, right? And it just keeps driving markets higher. All right, so anyway, that's the look at the overall situation. And we'll take a look at some commodities here. Here's oil getting a little bit of a sub 40 bounce. You can see we get under 40 and we bounce up a little bit, but it's not really necessarily a convincing bounce. It just could be an oversold bounce. If I look at the RSI, for example, here on oil, right, it was definitely oversold here. You can see that. It was oversold when it got below 40, so that was a good opportunity to buy it for a trade. But now that it's rallied up afterwards, it might be a short. I think you have to look at the trend, and one of the things that we've done in the past, we've used exponential moving averages on currency pairs, but you could also use them on oil and commodities. And someone pointed out, Ed, this is an FX Ed trade coming right down the 10-day moving average, right? Bounce, 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 bounce. And it's getting close again. And if it gets up to the 10-day moving average, it's probably a short. That's crude oil, right? But it was oversold down here, meaning it was too low to short it. And since then, it's popped up. And now it pops up a little bit more, it'll be time to sell again. Pretty fascinating stuff going on in the world of crude oil. Let's take a look at gold. Here comes Goldie. And gold looks pretty bullish, I gotta say. Moving average does nothing here. RSI does nothing here. But just look at the pattern that you're seeing. It's clearly higher highs and higher lows. And you clearly see a bullish channel here on gold. Right? Gold is Gold's definitely in an uptrend, and you've got this 1400 area up here as the next big resistance. That's all the way back. That's 2 years old. It's going back to early 2014, so that's 2 years old, that resistance level there. And if we back it up a little bit more, if I take you to the weekly, you can see that that's actually pretty bullish looking. I mean, we broke the pattern of lower highs and lower lows on gold, and gold's clearly been making higher highs and higher lows this year, right? And it's very, very clear on the daily, right? The higher highs and the higher lows. There it is. Okay, so there we go with gold. A few other commodities here. Silver, of course, does very well along with gold. Higher lows and higher highs. Potential for a double top here, so I'd keep my eye on that. But silver doing very well. And others. How about the softs? Take a look at wheat. Whoops. There's wheat seeing a little bit of a bounce, but way oversold, I'd be willing to bet, before that bounces. Fire up the exponential on this one too. Wheat coming down the 10-day exponential, more or less. I'd say less. Is it the 20? Is 20 money? Let's take a peek. Looks like it's coming up just shy of the 20 here on these reversals, so can't really use that. Certainly looks like it was oversold. We'll pull up the RSI. Yeah, much oversold activity down there on RSI, on wheat. And one more, soybeans. Lower highs, lower lows. So commodities in general are falling, right? Wheat, soybeans, oil, everything but gold. Gold and silver. Precious metals are going up. Gold, but all the other commodities that we checked are on the way down. All right, so probably not good news for places like Canada. Right, Canadian dollar, sort of begrudgingly heading higher. Dollar CAD. In other words, Canadian dollar actually moving lower here on this chart. But higher lows and higher highs, right? There you see it. Higher lows, higher highs on dollar CAD. And right now, it's down near the lower trend line. I think I'd draw a trend line from all the way down here and say 130 is a screaming buy for dollar CAD based on this. Based on this chart, 130 is a screaming buy for dollar CAD. Okay. Also, but just remember, it's not a really strong uptrend. We like to see stronger trends. You know, I like to compare a trend to a river. You know, if the river is really strong, has a really strong current, you know, that you put your boat in that river, you're going to get downriver pretty quickly. If it has a very slow trend, it might take a very long time to get to where you're going. You might decide to just get out and walk. So anyway, there's dollar CAD. Okay, so dollar CAD, really not the most exciting, but it's definitely in an uptrend. So how to play this? I think you've got to be a buyer near the 130 area, but I would also think in terms of multiple time frames here. So if I go to the 60-minute, right? What I want to see is an oversold reading on the 60-minute. And that would give me an opportunity to go long. And of course, if I go long, then I'm in harmony with the daily trend. I guess the issue here is that neither of these are particularly strong right now. US dollar is weak, Canadian dollar slightly weaker. This is what you're looking for on dollar CAD. You're looking for that sharp sell-off that creates the oversold reading. And then we pop. And here's a sharp sell-off, creates an oversold reading, and then we pop. Okay, that's what you're looking for. if you're looking to buy this. Now, keep in mind, not only do you have U.S. non-farm payroll tomorrow, but you also have the Canadian figures. The Canadian figures are coming as well. And so this is for Friday. So at the very same time that the U.S. is reporting its non-farm payroll number, look at all these statistics that are coming out of Canada, right? Purchasing Managers Index figures, net change in employment, that's the non-farm payroll report for Canada. They're looking for plus 10,000 jobs. Participation rate, that's the part of the economy that's participating in the economy, the part of the population, I should say, is participating in the economy. So we're going to get trade data, job creation data, PMI data, exports data, all at once in Canada. And it's all happening at the very same moment that the U.S. is going to report its non-farm payroll report. Why they couldn't move it, I don't know. But there it is. So we're going to get look at all the data that comes out exactly at 12:30 GMT in the U.S. and in Canada. So would I be entering a dollar CAD trade today? Let's put it this way. If I were to enter a dollar CAD trade today, I'd have to be out of that trade, let's say 23 hours from now, because in 23 hours and 9 minutes, all of those reports are going to hit simultaneously. So if I do place that trade, I've got to get out of it within 23 hours. Okay, or you could just wait and see where the dust settles after both countries report their jobs report. So kind of a tough situation. Anything that you enter now, if you're thinking short term, you probably want to be out of it before, in 23 hours. If you're thinking long term, you can stick with it, and usually longer term, it's okay to hold through non-farm payrolls in certain situations because your stop might be hundreds of pips, your target might be hundreds of pips away. It could be a very, very long way to your stops and your targets. Okay. All right, so that's pretty huge about what's coming up tomorrow in both the U.S. and in Canada. All right, so speaking of Canadian dollar, so we do like dollar CAD. What about some of the other pairs? So there's your trend on dollar CAD. Not a super strong trend, but we'll take it. We could also take a look at things like Euro CAD. Not tremendously bullish on the euro or the Canadian dollar right now. You know what I do like? Things like Aussie. Aussie seems to be one of the tougher kids on the block right now. Aussie CAD might, now there's a good trend, right? Here's a good looking trend, and that is really, it's like somebody drew the trend line first, and then, right, you see what I'm saying? It's almost like they drew the trend line first and then had this conform to it. Beautiful trend here on Aussie CAD. Aussie CAD, just remember, Australia and Canada, they're both commodity currencies. But there's a different mix of commodities. Australia does not export oil. There's a huge difference there, right? So if the price of oil continues to fall, it's a huge favor. Plus, what commodities are not falling? Gold and silver, right? We definitely Australia, one of the top 5 gold producers in the world. So there's definitely some fundamental advantages to going long Aussie CAD right now. And technically, it looks very nice as well. Once again, going to pull out the moving average indicator here, exponential. And the 10 is not very useful here. We'll see if the 20 has anything to say about that. The 20 does look interesting. The 20 very closely mirrors that trend line. So, for example, here, oh, a couple spots. 1, 2, 3, comes through a bit here. 4. So yeah, you're definitely seeing some play on the 20-day moving average on Aussie CAD. Carlos is suggesting New Zealand CAD. That's definitely a good place to look. New Zealand has also been one of the stronger currencies lately. New Zealand CAD looks awfully double topish, though, for some reason. This has had a very good run also. The moving average is clearly no help here. I'll get rid of that. I am a little bit concerned about that double topish look. I'd probably just vote for Aussie CAD on a pullback. Also, really, no real risk in Aussie CAD based on the Reserve Bank of Australia. We already passed any event risk with the Reserve Bank of Australia, and it turns out that it's pretty benign regarding the Australian dollar. Yeah, the RBA cut rates, but it seems like they're done. It seems like they're finished cutting rates. Okay. All right, so New Zealand, but Aussie CAD looking better of the two from my perspective. So Pound CAD, of course, Pound is not strong right now. I think it'll be strong later, but Pound having a rough day today across the board after this morning's Bank of England meeting, so we're not going to look at Pound CAD anytime soon. But pretty interesting scenario there. Okay. We still have a little bit of time left, so if anybody has questions or if there's anything in particular you want to take a look at, let me know. Take a look at Euro Swiss, which we have not looked at lately. Man, this is boring. Look how sideways this is. The thing that really struck me about this is, look at the ATR. It's moving 49 pips a day, 49 lousy pips per day. Euro Swiss. Somebody hold a mirror up to this thing's mouth and see if it's still breathing, right? Euro Swiss is fast asleep, right? Can't really work with that. It doesn't really help me very much. Okay? Boy, oh boy. No thank you, Euro Swiss. But these two have achieved some type of equilibrium again. So Aussie looking good against Euro here. This is a huge support level on Euro Aussie, and it's something that I've been meaning to point out. Take a look. Tell me if you see it. I mean, this has been going on really for over a year. And where you want to put that, I'm going to call it 144.50. 144.50 is right here. Look at that. All right. Lots of bouncing last summer. A little bit last fall. A little bit this winter. A little bit this spring. And here we go again. If Euro Aussie gets under 144.50, that could be a huge psychological break. I would also point out that these are lower highs. Here's your high point. And this double top is a lower high. And this formation, whatever you want to call that, is a lower high. Oops, here we go. So lower highs equal lows means it's one big old descending triangle, isn't it? Look at that. High, lower high, lower high. You could call this one a lower high as well. But it doesn't bode well going forward. Um, there's the opening bell. Stocks are green at the open here. It'll be interesting to see. Now, stocks certainly love all this stimulus that we're getting. Lower interest rates out of Australia, broadened stimulus package out of Japan, broadened stimulus package out of the UK, sustained stimulus package out of Europe, right? And on it goes, right? So stocks do love this stuff because why? It pushes bond yields lower. Everything that's happening is pushing bond yields lower, making bonds just less and less attractive. I mean, if you want, you can go ahead and get a European bond, and a lot of those bonds have negative yields. Any Swiss bond, even a 50-year Swiss bond, has a negative yield. German 10 years have a negative yield. Japan 10 years have a negative yield. There's so much negative yield out there on bonds. It's like, well, heck, why would I buy bonds? Might as well buy stocks. There's really no alternative, which is the rallying cry of the market right now. There is no alternative. Or TINA, T-I-N-A. There is no alternative to buying stocks. But Euro Aussie looks like it wants to go lower, and that's a huge support level. So if it gets under there, here's what I would be looking for. Let it break under, and then if it comes back up to resistance, right now this level is support 144.50. Right now it's support. Later on, that could be resistance, and if it breaks, and if it does break, I would be looking to sell short on a bounce up to 144.50. Let the initial trade go. I like the potential weekly support around 142.50 on Euro Oz. Let's put a line in there. And Carlos is talking about weekly. Let me plug that number in. 142.50. Make it weekly. I can see this here. Resistance, resistance, and then support. Yeah, if I were looking for the next level for this to go, I think you nailed it. 142.50, 142.60. Meaning this is a 200 pip drop if it gets under 144.50. I think you've nailed it. And if you look at it on the weekly, Carlos checked it on the weekly. I can see it on the daily, but if you look at it on the weekly, it's also there. I think it might actually be a little bit clearer on the daily. Just focusing in on this area. This is support, but look how this is resistance down here. 142.50 is resistance on the far left corner of the chart. Resistance breaks, it becomes support for a few days, then we rally up to this current support level, 144.50. 144.50 breaks, 142.50, the door is open. Okay, it's a good call there from Carlos, who, of course, does a lot of that sort of thing around here. Carlos makes a lot of good calls, and we appreciate that. It's always good to have, we love to see people in the room making good calls, and just taking a peek here at Tesla, opened up higher or close to even. It looks like it's starting to sag just a little bit here. I don't know. I mean, it's a funny stock. If this stock traded on its fundamentals, it'd be a $50 stock. It's all based on future potential, which may or may not ever amount to anything. But right now, the market's giving it a high premium on its future potential. But sagging a little bit after earnings report. We'll see if that continues. But certainly there was some buying at the open. There are people who buy this stock no matter what. They're fans, right? They're fans of Tesla, and I get it. The company has an interesting vision for the future, and if their products could succeed, the world I think certainly becomes a better place. The problem is, companies have to make money, and this company just lost a ton of money. It's never turned a profit, and so it's hard for me to justify having this type of price ratios on it. These type of fundamentals are just not good. All right, I'm out of here, gang. Great week this week. Very exciting. Hang on, hold on to your hats for non-farm payrolls tomorrow. And I'll see y'all again very, very soon. Everybody have a great day. My name is Ed Ponsi. I'll be talking to you again. Everybody take care.